What is multifamily real estate investing? You're probably familiar with residential real estate investing in single-family homes, but there's a whole world of investing beyond that. If you've ever wondered what multifamily real estate investing is all about, you've come to the right place. In this video, we'll dissect this lucrative form of real estate investing and show you why it is a favorite among many investors. All right, let's talk about the definition of multifamily real estate. So multifamily real estate encompasses different types of multifamily properties. So you've got, starting at the scale, you've got a duplex, meaning it's 2 units. Then you move to a triplex or a fourplex. And then once you get beyond 5 units, that then moves into what is considered commercial. So now you get into apartment buildings that are 5, 10, 15, 20, 75, 150, 250, 500, 1,000. I mean, there's really no limit per se with respect to that. I know many people will look at investing in multifamily and they'll think, well, I'll get a duplex. I was talking with a guy on the beach this past week. He just bought a house near a property we own out there. And he said, oh, what do you do? I said, well, we own and operate apartments and people invest with us. And he said, oh, I invest in apartments too. I said, oh, that's wonderful. He says, yes, I own a triplex. And so that's true, but it's not the same level of true as us with apartment buildings. Now, there is definitely benefits of multifamily investing. There's advantages when you invest in multifamily properties, including cash flow, economies of scale, and reduction of risk. So, let's think about it. If you bought a single family home and the person moves out, you have no income coming in. Now, if like the gentleman who bought the triplex, you buy the triplex, one of those persons move out, you lost 30% of your revenue, but thank God you still have, 2/3 still coming in. Now, here's where it gets exciting. You move into a larger multifamily property, meaning a real apartment complex at 75 or even let's just say 100 units. Now you have 3 people move out. That's not a problem, right? Because you've got great cash flow coming in from the other 97 apartment units. You also have economies of scale, right? So that when you own 100 units versus 3 or 20, you have a greater scale where you can afford to pay a property manager a full-time wage for her or his job to be full-time there on site, on location, managing that asset, collecting rent, driving income, driving benefits to the residents. And you also have the ability, because of that economies of scale, to get discounted purchasing on AC, carpet, flooring, paint, because you're a larger volume buyer. Now again, us that owns thousands of units, we even get greater economies of scale and greater pricing. And then also, as a maintenance man itself, as part of the team, you're able to get a qualified maintenance personnel that's also AC Tech certified, and that can save dramatic costs because now when your tenant has a problem with their AC, it's our in-house maintenance guy that's going to fix it. So all these economy scales also bring us to a greater risk reduction because we're saving money and cost, and we've had this expansion of units that reduces our risk overall as an investment, because now, even though we're investing larger dollars, it's at a lower risk because we're at less risk of vacancy, we're at less risk because we've got lower expenses, and we're at less risk because we're a diversified tenant pool. So if 3 people work for a particular company and that company lays people off, we still have 97 people that work at a variety of industries. So again, the benefits of multifamily are many, and you want to make sure to take advantage of it. Financing multifamily investment, this is a fantastic topic. This is one of the great advantages that multifamily has over other types of real estate, even commercial real estate. What I mean by that is providing housing to our fellow Americans is a necessity, and the federal government recognizes that people genuinely need a place to live. Now, not everybody needs a storage unit. I happen to have 2. But they recognize as a government that people need a place to live. And as such, they back and support specific financing options. So you've got bank financing or bridge financing that's available. Typically, that's about 70 to 80% loan to cost, and then typically 100% of renovation costs. You have Fannie Mae and Freddie Mac, which is the government-backed lenders, where they will typically loan. Historically, it was 70 to 80%. In today's market, it's probably 60 to 72%. but they will also give you a fixed rate loan that will hold that term for 5, 7, 12 years, and then give you a 30-year amortization, which is an attractive feature that helps reduce your outlay. They also will go and provide interest only for that period of time too. You could get a 5-year or 7-year interest only. That is a huge value proposition to increasing cash flow. And then also the government provides for HUD financing, which is up to 40 years on the payback. And so that's another tremendous benefit. And even in today's moment where we've experienced higher inflation and higher interest rates, the government-backed loans right now, you can get on a quality property probably 5.25 to 5.5 at the time that we're shooting this video. So again, that's tremendous financing options. And then there's a multitude of local regional banks and credit unions that also see the value of being able to provide the necessity of housing through multifamily. And then also life insurance companies. Life insurance companies use their monies. When you're paying in premiums to the life insurance, that money accrues and piles up, and they turn around and invest it into loans with multifamily to get a return. And then lastly, I would say there's also a plethora of commercial options through CMBS loans that, you have big brokerage firms that are conglomerating together pools of capital to make lending available on multifamily. So a lot of wonderful financing options, even in today's moment. If you're enjoying this video, make sure give it a like and subscribe to my channel. Next, let's talk about managing multifamily properties. This is a key component. Now, again, you've bought the property, now you have to manage it. Some people have the mistaken belief that, okay, you just put a property management company on it and it's going to take care of itself. Now look, first and foremost, you've got to have the right property management company. You've got to have the right manager on site, the right regional manager overseeing it, the right maintenance team or staff. These are all critical components because these people are included in the day-to-day operations. They're interacting with the tenant. They're creating the tenant relations. They're handling property maintenance. And so, it's not just a set it and forget it kind of thing. The people that take that approach oftentimes end up paying a price for that. So for us, we deal with key partners in each market that we're in, meaning that we use a third-party property management, but they are a partner with us in the sense that they're managing, 3, 4, 6, 10, 12 locations for us. So we are a key strategic ally or partner for them. And they also adjoin to our values and focus and are responsive to us because of the relationship we have. Now, also, we have our asset management team that works directly together with them on a weekly and sometimes daily basis, depending on the intensity of the focus of the property and the renovations that may be going on. And with that, we're able to measure the key metrics of what's going on a weekly basis. What's happening with collections? What's happening with delinquency? What's happening with evictions? What's happening on progress of turning units? What's happening with respect to the exterior renovation? So all these are critical things. And you want to be managing these by a KPI, key performance indicator, so that they're key numbers that you want to look at every single week and every single month to make sure that the property is on track and performing to what we've intended it to achieve. So let's lastly talk about exit strategies. There's a variety of exit strategies for multifamily investments. You could look at selling the property, refinancing the property, recapitalizing, or even exchanging the properties. As those different options exist, let's take a look at each one. So for us as a firm, what we do, now again, not everybody does this. Maybe it's too much work or they haven't thought it through, but I want to share it with you. We look at each option. As we buy a property, we've got a genuine plan, whether it's 2, 3, 4 years, depending on each project has its own timeline of what we believe we can achieve during that period of time. So let's say it's a 3-year plan. We've achieved it to the 3-year mark. We first evaluate the market conditions, like is this a time that is reasonable to sell? And then we run through and we work together with our brokerage team with respect to the selling, get a broker's opinion of value from multiple guys or gals in the area that we work in so that we see it confirms what we think the value is, that they think the value is. And then we compare that to selling the property, what the returns would be for us and our investors. And then we also look at what would it look like if we are refinancing the property. And then we look at what would it be if we were recapitalizing the property, bringing in new investors? What would be the return to the existing investors and new investors? And then looking at, do we just sell the property in 1031 or exchange to another? So again, with that, we run the return scenarios, and then for us, it's less of a emotional process and more of a numbers thing. Is like, what's going to generate the best returns? And somebody says, well, why are you selling an asset that is generating cash flow and it's a good asset? Because again, we're able to maximize the return to our investor partners in our firm as well, and then repeat that process in a new investment. So again, that's really key that you want to look at and evaluate each of the strategies. Now, and again, when you're selling, it typically maximizes the return on equity. You refinancing, oftentimes you're going to have a little bit of drag on the return on equity, because where you're selling, you capture 100% of the gain of the value of the property. Refinancing in today's market, you're probably 65 to 70% on the new value of the property. And so again, with that, you're not capturing back all your money, you're leaving some money or equity in the property, and that's where that return on equity comes down. And this is a piece that many people miss. They just look at the cash flow and forget about the return on equity as a critical component. Hey guys, I have a free gift for you in the description of this video. 2023 has been a rough year for the markets, and people are wondering how can they protect their portfolios and thrive during this economic volatility. I recently made a free training to show you how to recession-proof your portfolio with multifamily investing. It's completely free, and you can view it by clicking the link in the description. That's all I have for you today, folks. I hope you're able to learn something, and I'll see you in the next video.